What if you invested 50% of your salary in mutual funds? Sounds crazy, right? But what would actually happen if you dared to try it? Let's find out together. Would I keep investing 50% every month? No, it's too extreme for the long haul.
But I am not going back to old habits. My biggest lesson: track your spending and build the habit. Wealth isn't built in a day, it's the result of small, consistent choices. Your future self will thank you. But I learned to detach and focus on the long game. After 30 days, my investments grew by about 2%. Not huge, but real. It was real. And so was my control over spending. I discovered how much I used to waste on impulse buys, not just income. Overnight, my budget was slashed in half. Every expense was scrutinized, hunted for grocery deals, and swapped cabs for public transport, movie nights in, walks in the park. Living on less forced me to be creative and disciplined. It was tough, but empowering. Deciding where to invest half my salary was daunting. I split it into 3 mutual funds, 40% in a Nifty 50 index fund for stability, 40% in a flexi cap fund for flexibility, and 20% in a small cap fund for high growth. Diversification was my safety net. Hitting confirm and watching half my salary disappear into the market was nerve-wracking. But the experiment had begun. Now it was about living with the consequences and trusting the process. Not 20, but a full 50%. Most of us are stuck in a cycle of earning and spending, always pushing our financial dreams further away. Invest 50% of my salary in mutual funds and live on the rest. This isn't just about numbers, it's about testing limits, changing habits,
And seeing what happens when you put your future self first.
Let me break down the first week. The hardest part was saying no to things I used to buy without thinking: coffee runs, online shopping, and eating out. I had to get creative with my meals and entertainment. I started tracking every rupee. I used a simple spreadsheet and a free app to monitor my expenses. It was eye-opening to see where my money actually went. By week 2, the temptation to dip into my savings was real. Friends invited me out, and I had to explain my challenge. Some thought I was crazy, but a few were inspired to try it themselves. I researched mutual funds every night. I compared past returns, risk levels, and fund managers. I learned about SIPs, expense ratios, and the power of compounding. Midway through, I faced a setback. The market dipped and my portfolio value dropped. I felt anxious, but I reminded myself this was a long-term game. I focused on my goals. I wanted to build wealth, not just save money. I visualized my future owning a home, traveling, and being financially free. By week 3, I noticed my mindset shifting. I felt more in control, less impulsive. I started enjoying simple pleasures: walks, reading, and cooking. I also learned to celebrate small wins. Every time I resisted a purchase, I felt proud. I tracked my progress and saw my savings grow. At the end of the month, I reviewed my results. My investments had grown, and I had saved more than ever before. But the biggest change was in my habits and confidence. If you're thinking of trying this challenge, start small. Maybe invest 10 or 20%, track your spending, and see how it feels. The journey is worth it. But what if you kept this up for a whole year? Imagine the power of compounding. Your investments could grow far beyond what you expect. Of course, life happens. There will be emergencies, temptations, and setbacks. The key is to stay consistent and not panic when the market dips. If you're just starting, try 10% or 20% first. Build the habit, track your progress, and increase your investment as you get comfortable. The most important thing is to start.
So, would you take the 50% mutual fund challenge? Let me know in the comments. If you found this helpful, like, share, and subscribe for more real money experiments. Remember, Your financial future is in your hands.